What a week it's turning out to be for Nykaa after that massive pop on its IPO, trading about 1 lakh crore rupees in market capitalization, more expensive than the likes of Britannia, BPCL, one third of ITC. We've seen the parent company of Nykaa come out with its first quarterly numbers since listing. Yes, we're an action-packed week. The revenues have gone up 8% to come in at 885 crores. That's quarter on quarter. EBITDA margin, meanwhile, has narrowed to 3.2%. But what we've also seen is the bottom line. Well, if you look at the profit, it's come in at 1.2 crores, and sequentially, that's down 65%. I'm going to be talking about that and more with the boss lady at Nykaa, Falguni Nayar. Falguni, I hope you've had enough time to digest all the developments that have taken place the last couple of days, including that huge IPO and the listing premium. Let's begin by taking your first reaction on the numbers. Might be concerns that we've seen the net profit fall sequentially when during the time of the IPO, of course, you've been saying how you are different from other new age companies with a firm eye on the balance sheet.
I think to us, nothing much has changed. I think one has to compare that even last year, the first half it's seasonally adverse quarter for our industry, and it's always been so. In fact, last year, because I'm talking about now March 21, because of the COVID impact, first quarter had a loss, and even the first half had a consolidated loss, which turned into profit for the full year. So second half profits were much higher. So if you look at, and all of this information is there in our numbers, but our first half losses last year were at 25 crores. And second quarter last year was also just 4.7 crores of profit. So these are small numbers. Last year, marketing cost was only at 5.2% of sales, again in the first half, which according to us is not sustainable. It was very low level of marketing, which was impacted by first 3 months by COVID, and second by COVID uncertainty of how long it will last. And in wake of that, we were conserving capital. And all of that has since changed, where I think the market opportunity is huge. This year, we are seeing a very strong festive quarter. We were seeing that starting October, which is when our festive quarter begins. We expect the festive quarter to be strong, led by festive and wedding and demand, as well as e-commerce industry does big sales during Singles Day and Black Friday, which also we call it Pink Friday. So I think given all that, we were investing in customer acquisitions, and we have taken up our marketing costs to level of 13.7% in the September end quarter and 12.5% in the first half. So I think we do believe that this is as per plan, and you can see impact of that in whether it is in terms of unique customer visits or whether it is in terms of annual transacting customers. All of those have gone up on both our platforms, beauty and fashion.
Falguni, I know you get it better than most other, maybe any other unicorn founder that we have out there. Now, since that massive listing pop, this is the first quarterly profit that's come in, right? How will you react to those who say, look at this company, got a market capitalization of more than 1 lakh crores, but a quarterly profit of just about 1 crore of rupees?
I think, I've always said that for any investor to understand e-commerce companies which have a large addressable market and a very small e-commerce penetration at the moment, even in beauty, our e-commerce penetration is 8%, and fashion, it's about 12%. I mean, not just ours, industry penetration. So given that the market opportunity is large, all of us are investing in new customer acquisition at the moment, and our numbers are a reflection of new customer acquisition that we chase in any quarter or in a year versus all the returning customers who come and buy on our platform. And for newer segments that we cater to, like fashion, which is only third year into making, obviously during early phase we spend a lot more on marketing relative to more mature business like beauty. So I think a lot of institutional investors, and I would urge even public investors to understand how our industry functions. And with that, all I can say that at Nykaa will be reasonably transparent with all our numbers so that they can see that we are treating the capital with a lot of respect, and we are doing the right thing from the perspective of what is right in the long run.
So any guidance that you can give to the street when it comes to, since you're already profitable, you're saying the 65% decline that we've seen sequentially is also to do because you had to increase your marketing spends, customer acquisition. We take that point. But guidance for the markets going forward if you were to talk about the bottom line and margins?
So unfortunately, I can't talk about forward-looking statement, but all I can say is that our story is pretty transparent and a lot of learnings are there from historical numbers itself. So I would urge investors to look at last year's analysis also between first half and second half. In fact, we've seen a very strong growth in revenues year on year, and in fact we are not expecting. If you look at the first half, net revenue growth has been, which is there in our numbers. Our first half net revenue from operation has grown 91% year on year. But we are not even asking investors to extrapolate that for the full year. So we are saying most of the learning will come from comparing our first half and the second half last year. First half was unnecessarily subdued on revenue, and hence the net revenue growth for this year is at 91% year on year. And in terms of the profits also, similarly last year in the first half we spent only 5.2% as marketing costs, whereas this year we have spent about 12.5%. Last year first half was only 4.3% as marketing costs, and this year we've spent 12.5%. So I think we are going to definitely spend more on marketing, but rest assured that all of that will lead to higher level of customer visits, unique customer visits, annual transacting customers, and hopefully orders, and hence net revenue. So that's the whole plan, that continue to build momentum in our customer acquisition journey.
Falguni, you have told me in the past that most of your new customer acquisitions are not happening in the metros, it's happening in the smaller towns, where you're also seeing a positive bias and a more favorable bias when it comes to the wallet share, the total wallet share at Nykaa, the total cart share, shopping cart share at Nykaa as well. Fashion is being seen as the next business that will be scaled up. Bernstein, for example, sees that as a much bigger market than makeup and personal care. Is that going to be the focus area for Nykaa? Will you be investing more in that? Will you need more showrooms? Will you open more stores? And therefore the spend is only going to keep going up?
Yes and no. So for example, we are definitely growing in all the markets, tier 1, tier 2 and tier 3. And we are not deprioritizing tier 1 at a cost of we are not saying we are not going to prioritize on tier 1. We want to grow in all the 3 tiers because there is demand in metros and there is demand in non-metros. And we will be focusing on both, even vis-a-vis a physical store rollout or e-commerce. And we are just highlighting the reality today where the tier 2 and 3 markets are growing faster than tier 1, because tier 1 markets were also impacted more by COVID and people were not as free about either stepping out or mingling. There is a level of activity in metros was lower. I think all that has since changed since October. We are definitely seeing greater desire to enjoy a normal, whether it is festivals or weddings or year-end season. So this is a seasonally strong quarter, and we are hoping that there will be good growth. But yes, we will continue to acquire and add to the top end of our funnel, but at the same time our top end of the funnel is so large. Like this quarter we've announced that there were 21 million monthly visitors on our beauty website and 16 million monthly visitors on our fashion website. So now a lot of our customers know about Nykaa. They are familiar with Nykaa, they are visiting our website, and the task remains to match the right products to the right customers so that they have a pleasant experience and they shop online. So winning the customer trust and winning their long-term engagement with us is the key focus for Nykaa.
And with that, Falguni, I'd like to thank you for joining us today on ET Now and being so candid.
Okay.